Greetings, welcome to another episode of The Citizen Digital. Your host, Mpoki Thompson, managing editor for The Citizen. In today's episode, we have an exciting interview with the chief executive of Stanbic Bank at Tanzania, Mr. Kevin Wingfield. You'll get to know about the conversation in a short while. Kevin, welcome to Mwananchi Digital. Welcome to The Citizen. So you are the chief executive of Stanbic Bank, Tanzania. And 2022 is a remarkable year for the bank, for the Standard Bank Group. You are marking 160 years since the bank was founded. I would want us to talk a bit about that. Can you tell us what 160 years means for Stanbic Bank Tanzania, but for the Standard Bank Group?
Thanks, Mpoki, and great to be here with you. So yeah, 160 years is quite a milestone. I think as a banking group, we have a rich history on the continent. But I tend to, I think about the 160 years as a milestone, but I think about it in terms of how we look forward. But maybe just to give a little bit of color to the 160 years we've been through as a banking group. So we actually started as a bank in South Africa in 1862 in Port Elizabeth. We were actually banking wool farmers. And so we actually, interesting enough, as a bank, have a very long pedigree in supporting agriculture. So that's something that we pride ourselves on, and we continue to do that. And then when gold was discovered on the Witwatersrand in the sort of the 1870s, 1880s. We then started banking the gold miners. We'd also, just before that, been banking the diamond miners in Kimberley. And then we began to continue to expand. And so by the sort of 1910, 1920, we had started to expand across the continent. And by 1950s, we actually had over 600 points of representation across the continent.
So it's quite interesting to see the journey that Standard Bank has had over the years up until today, when you're working 160 years in the business, and you have been a part of that journey for a couple of years. You've worked in South Africa, you've worked in Ghana, you've worked in Uganda, and then in April 2020, you became the chief executive of Stanbic Bank here in Tanzania. Can you tell us what have been the highlights of your journey through these different African markets and the Tanzanian market? And what specifically would you take out if you were to say that your service in South Africa, your service in Ghana, your service in Uganda, and your service here in Tanzania? What have been those highlights that have really marked your journey?
So I guess some of my key takeouts would be, I think the first thing is just in terms of from a personal experience perspective, has been benefit of being able to work with a fantastic teams on the ground, being able to take what in the businesses that I've been involved in have been quite different. So some were needed scaling, others had scale but needed to refine some of our focus. So I think working with fantastic people and fantastic customers, and then being able to bring a mix of what Standard Bank Group can bring to the franchise, but also saying how do you make sure that you are locally relevant in terms of the economy and the role that you play in driving growth in those economies. But I think for me, as a banker, what I take the most pleasure in is the fact that I think we're unique as bankers, that we can play a direct role in driving growth and helping people build their livelihoods, whether it's giving someone their first home loan, whether it's helping someone pay for their education, whether it's giving a small business a loan to take their business to the next level. I think that's a very it's a unique opportunity that we have, and it's certainly something, when I look back on the role that I've played and the role that the bank's played, it's something that I take away with pride and feel that yes, we've created a legacy but we will continue to create that legacy and build that legacy as a continent and as the countries and as a banking organization.
Okay, so just let's delve a bit deeper into Stanbic Bank's operations in Tanzania. Definitely, as you've said, you've had vast experience in other markets, and then now you're in Tanzania. The role that the bank plays, we understand that the financial market or the financial sector is a volatile, space. The industry changes. There are multiple challenges, be it policy, be it regulatory, or even just the space, the digital disruption. So can you give us a bit of a highlight about the Tanzanian market specifically? What have been some of the challenges, but then what is the outlook for the Tanzanian market and the role that Stanbic Bank plays?
So we've been in this market since 1995. So we've just celebrated 27 years in the market. When we entered the market, we bought what was then Meridian BIAO. And so over time we've been looking to grow, and we have been growing. But I think the bank for a lot of the lifetime here has been quite a corporate focused bank. So I think we are perceived sometimes as we certainly are an internationally connected bank. But I think what we are trying to do now is to say, how do we position ourselves better to connect better with the country and be seen as more relevant to a broader spectrum of customers, not just corporate customers, but also business and enterprise customers, as well as retail or what we call consumer customers. And so as I say, we've had a very strong corporate investment banking franchise over a number of years, but we are now deliberately moving into other areas that we can support. So, and our focus is very aligned to one, the opportunities in the country that exist and that are emerging, and very aligned with what the government is trying to achieve from a policy perspective. So, and then also very aligned to the capabilities that we have as a group. So the likes of agriculture, I mentioned, we started as an agricultural bank. So for a number of reasons, we haven't played significantly in the agricultural sector here, other than in the kind of agro-processing side. But we are now looking to, and we've been building capability. We now have a dedicated team that are focused on agriculture, but more broader than just the large agro-processors, but into those value chains within agriculture. That would be one. I think we've always played quite a meaningful role in mining, and we will continue to do that. We have strong expertise in mining. I think the emerging energy sector is a really, really important one for us, and I think we've demonstrated in many other markets that we have strong capability to support that. And so, we certainly believe that we can play a really meaningful role in supporting the energy sector in Tanzania. And I think just a couple of weeks ago, we actually launched our LNG macroeconomic study together with the various stakeholders involved in the LNG opportunity. And I think that was very well and positively received. And we are certainly really excited about how transformational this project could be for Tanzania. And then I think, other areas like in the enterprise space, the trader, we recognize that in many of the markets we operate, the SME trader is almost the heartbeat of many of our economies. And while we've played there, we believe that we need to do more, and I think we do it very successfully in other markets. How can we do it in Tanzania?
So if we were to just go back a little bit to the enterprises, the small scale traders, you say that Standard Bank has been successful in other markets in implementing and ensuring that small businesses tap into the capital and all that. Now for Tanzania, you are doing it, and you've mentioned some of the vivid examples. But what do you think derails the implementation of some of these outreach initiatives to ensure that people, youth engaged in businesses, the small scale traders, really the barrier is removed for them to tap into the market? What are some, from you as a key sector player, what do you think inhibits this progress?
Yeah, so I mean, I think, the reality is that anywhere in the world, starting a small business is not easy. And I think there are, on the continent and in Tanzania, there are certain challenges that one has to navigate. So I think, a lot of discussion around access to finance, I think, comes up regularly. But I think there's also, the big part of it is access to skills. So I think one needs to make sure that what we're trying to do as an entity is to provide access to skills that are going to support those businesses as they try and scale up. And so, for example, through programs like the incubator, we believe that is better equipping local businesses to be able to scale. I think the other thing that we can do is provide access to partnerships. So, sometimes as you look to grow your business, it does help to be able to have access to other similar businesses that you can then work to partner with. Some of those businesses might be based locally in the country, but there may be other investors from outside the country who are looking to come in and invest, but looking for a local partner that they can work with. So we can often make those connections given the network that we have. And then I think access to finance is really, really important. And so, we are looking to and we are putting in place some specific funds that we ring fence to support small business. As we take those businesses through our incubator, many of them are not even our customers. But as we build a relationship with them through the incubator, many of them are joining us as customers, and then we are able to actually then understand their business a bit better, understand where they're going, and be able to then support them with financing going forward.
So has this been part of the Africa Women Impact Fund? Have Tanzanian women benefited from that? Because the Standard Group, I think, contributed, it was around $60 million in cooperation with the United Nations. So I just want to get a sense of how Tanzania has been able to tap into that. These international programs that are rolled out on a broader scale, how do they trickle down now to Tanzanians? 2
years ago, and Standard Bank was involved in with the other partners to set up that fund. The objective of the fund is actually to support creating asset managers or women to have greater access to funds. Because if you look at globally, I think around just over 1% of global asset management is actually managed by women. And so, we believe as a bank that diversity is and giving opportunities to gender equality is really, really important. One from I think it's the right thing to do, but it also makes it's a business imperative.
Perfect. Now let's talk about the bank's performance. 2021 wasn't quite a good year for Stanbic Bank. You recorded a loss, I think, of 4.6 billion in the first half of the year. But 2022, there was a major turnaround. First half performance for 2022, Stanbic Bank, over 14 billion in profit. Now, can you tell us about what were the major setbacks in 2021, which I believe maybe COVID and other issues might have factored in, but then that major turnaround, 2022, 14 billion shillings, first half of the year. What contributed to that major turnaround, and what is the outlook?
So I think you're right. I think a number of factors. Obviously, coming into 2021, we were still in in COVID, and obviously COVID was a difficult time for everyone. I think the first thing is what I think we need to be thankful for is that we've largely seen the back of it, and that we were lucky that from in terms of our staff, we didn't lose anybody. So we're very thankful that and our staff continue to work and serve our customers right through that very difficult time. So I think that's a huge positive. But in terms of the results, as I said, COVID put a lot of pressure on businesses, and as a consequence, I think there were pressures in terms of being able to meet repayment commitments. As a bank, we did restructure a lot of customers and gave them a longer time to repay, gave them payment holidays and so on. If we look at the performance, though, I think there were some other factors. I think the economy, besides COVID, was also went through some challenging times. I think generally across the industry, the levels of non-performing loans was very high. Still remains quite high, but has improved significantly. And I guess as a bank, we were no different. We also had high levels of non-performing loans coming into 2021. So we took very deliberate steps to spend our time strengthening our internal capabilities and working with our customers to rehabilitate where we could, or in terms of writing off those loans that we couldn't collect, and continue to work though to collect those. So that I think the key driver of the performance in 2021, of the poor performance, was significant write-offs of non-performing loans. But going into 2022, we I think we're in a much better position, and we've kind of now very systematically. I've talked about some of the things we've been doing in terms of where we're focusing our business. And so we have started to see very positive growth in our customer deposits. I mean, that's been a really clear focus for us as a bank, to de-emphasize on the lending side and really focus on making sure that we can deliver solutions to customers that allow them to transact in a seamless way. We've really spent a lot of time through 2020 working to digitize a lot of our capabilities, both internally, but also in terms of what customers experienced. And then gradually now into 2022, we've started to increasingly lend back into our customer base.
Okay. Now, back to the digital disruption. You've talked a bit about how the bank has now invested, in the digital facilities. We're seeing the disruption happening across various industries. Now, for the financial sector and Stanbic Bank specifically, what would you say comprises the amount of the digital facilities that you use? How has the disruption sort of impacted your business, and how are you rolling it out throughout your entire service delivery?
So I guess the way we think about it is I guess we call it digital disruption, but I think we actually we see it as a huge enabler for our business, because ultimately, the more we can get our customers to transact anywhere, anytime. It creates convenience for them, but two, it helps us in terms of managing our costs, because the reality is that having physical points of presence where everything needs to take place is quite an inefficient model to pursue. That doesn't mean to say that we won't continue to grow our physical points of representation, because the reality is that people do still want to have that personal touch. They want to be able to go and see someone and speak to someone who represents the bank. But that really will typically be more in kind of a sales interaction, or that they have a specific need that they need where they need advice and so on. But what we're trying to drive is where it's the kind of day-to-day transactions that you're doing. How do we get our customers to do that more and more in the digital world? But there's obviously a couple of things that need to happen. So, and to continue to be able to deliver those in an efficient manner and in an agile manner, because customers don't stand still. They're continually looking for the next opportunity, the next innovation. So we need to constantly be looking to see how can we innovate, how can we be agile. But as we do that, are we making sure that we're really listening to our customers? Is the customer driving what you're doing, not you driving that outcome?
Indeed. Now, there's this interesting concept that's called the three-box solution, where you have the past, the present, and the future. Now, how has Stanbic Bank been able to sort of implement that in order to envision what the future looks like? What are some of the things that you've had to live in the past? What is defining your presence and what will define your future?
Obviously, the first thing that defines how we think about the future is what our customers are telling us. I think we really need to continue to be laser focused on what our customers require of us. I also indicated that we are very clear about where we wish to play as a bank and where we don't wish to play. So I think it's about being very clear about which customers you want to support, and then really engaging with them and listening to them in terms of what you need to build to support them as they build their businesses and as you know, in the consumer space as they conduct their daily activities. What do we need to be doing internally? So obviously, one of the things that we're really working very hard at is the culture and supporting our people in terms of their growth. So we invest a significant amount in building our people capabilities and giving our people access to training. We have what we call internally in Stanbic Bank or Stanbic Bank as our future ready journey, and that really talks about a lot of that is about the culture and growing our people so that we give them the skills that will allow them to support our customers as we move forward in the digital world. We're actually moving away from calling ourselves a bank to actually calling ourselves a digital organization over time. So investment in people is really important, and we've also as we've done that, we've also focused on how we support diversity as well. So we spoke about women earlier. But we have a number of programs in the business in Tanzania that actually support the development and upskilling and creating opportunity for our women leaders and the team.
Perfect. So there's a lot of foresight, and it's a strategy that I think fits quite well with where the future is headed. Now, you're celebrating 160 years today. What will define the banking sector in Tanzania, in Africa, globally, the next 160 years?
Well, I think we've touched on one of the things, which is obviously digitization. So I think that will remain a theme. I think what is happening is that the industry, the banking industry, is having to reinvent itself, because I think there's a lot of non-traditional players coming into what was traditionally a fairly protected industry. So obviously we're seeing pressure from fintechs. We're seeing pressure from mobile financial services operators. We haven't seen it so much in Africa or in Tanzania yet, but certainly the big tech companies, whether it's a Google, whether it's a Facebook or whatever, WhatsApp, those companies increasingly are entering into the financial services sector in many markets. I guess it's only a matter of time before they start to enter some of our markets here, and some cases they already have. So I think it's the sector is a dynamic sector, and so as an industry we need to continually evolve with it. I think in some cases as a sector we've missed opportunities. So for example, I think in East Africa particularly, I think mobile financial services operators have managed to capture a big part of the traditionally unbanked market. And I think as a sector, we need to explore how we play a bigger role in that, and that could be not necessarily competing with the MNOs, for example, but actually just saying how do we collaborate better as businesses.
So as we wrap up, what is the one thing, if you were given a chance, that you would advise the government to sort of improve in the financial services sector? What would it be?
So I think that we've made significant positive strides. I think if you just look at, and we touched on our results, what we didn't talk about was the industry results. I think the industry is looking, the 2022 numbers are looking a lot more positive. I think, some of the key metrics, whether it's, as we talked about, non-performing loans, I think, shareholder returns are beginning to improve. Still, I don't think at the levels that we would like to see, or that shareholders would expect. But certainly, I think we're seeing some really positive green shoots from an industry performance perspective. And I think that is to a large extent is as a result of the economy really beginning to get some momentum as a result of a number of the initiatives that government has been putting in place. I think what I would like to see, some of the things specifically from an industry perspective, I think the levels of engagement are good. But what I would like to see is that as we have that engagement, that when we go away and then look at policy and regulation, that we take that input and we say, how do we together work to make sure that we can actually that whatever policy and regulation we put in place is there to enable rather than disable. So I think just the engagement levels are good, but how can we make sure that following that engagement, that the policies then reflect that level of engagement? I think the other thing I'd like to see is more consistency. So across different policymakers, different regulatory bodies, because often we see, one regulatory body has a particular framework, and then has a different framework, and when you're then operating as the private sector, sometimes to connect those makes it very, very difficult, and essentially creates a lot of inefficiency in the system. I think if we, as a country, I think we're doing a lot of fantastically positive stuff to attract foreign direct investment. But I think some of these things around getting the right alignment across different policymakers and regulatory bodies, I think is going to be extremely important as we move forward. And then I think largely the last point I'd make is we talked about the digital economy. And so I think it's really going to be important for policymakers to say, how are they putting the right policies and guardrails in place to enable Tanzania to move rapidly down the digital journey, and that cuts across a number of different, whether it's putting the infrastructure in place, whether it's putting the right enabling policies and regulations in place, etc. But I think we need, reality is we're competing in a global world. And so we need to make sure that as a country, we are moving quickly to get the right policies in place to support that digital economy that will enable us to grow and participate effectively in the region and in the continent and obviously globally.
Well, Mr. Wingfield, it's been a great conversation. Well, you were with me, Mpoki Thompson, for the Citizen Digital. Until next time, bye-bye.